Have you ever found yourself wondering how large institutional trades or significant price discovery events happen in the often volatile world of cryptocurrency? Perhaps you've placed a market order only to be surprised by the execution price or struggled to get a large order filled without significant slippage. Today, we're diving deep into two powerful, yet often misunderstood, mechanisms on the Gemini exchange, the Gemini auction and market on close, MOC, orders. These aren't just advanced trading tools, they're fundamental components of how efficient, transparent, and deep markets are built, even in the decentralized digital asset space. Many people think of crypto trading as a continuous, 24/7 frenzy, where every order is filled instantly at the displayed price. And for smaller, immediate trades, that's often true. You hit buy, and your coins appear almost instantly. But what happens when institutions need to move millions of dollars in Bitcoin or Ether, or when the exchange needs to establish a definitive, fair closing price for the day? That's where mechanisms like auctions and MOC orders come into play. They are designed to aggregate liquidity, minimize market impact, and provide a robust benchmark for price discovery, a cornerstone of mature financial markets. Think about traditional stock exchanges. They don't just have continuous trading, they have opening and closing auctions. These crosses, as they're often called, are critical for establishing fair prices at the start and end of a trading session, absorbing large order imbalances without causing wild price swings. Gemini, a regulated and compliant exchange, has brought similar sophisticated mechanisms to the crypto world, adapting them for the unique characteristics of digital assets. So, let's break down the Gemini auction first. What is it, and why does it matter? Gemini's daily auction, which originally launched for Bitcoin and later expanded to Ether and other assets, is essentially a scheduled event where all eligible buy and sell orders are matched simultaneously at a single price. This isn't your typical eBay auction where the price keeps going up. Instead, it's about finding the equilibrium price, the price at which the maximum quantity of an asset can be bought and sold. The auction happens at a specific time each day, traditionally 4 p.m. Eastern Time for the main auction, though there have been East Asian Time Zone auctions as well. Leading up to this time, participants can place auction-only, AO, market and auction-only, AO, limit orders. These orders are specifically designated for the auction and won't be filled on the continuous order book. This is crucial because it allows large players to signal their interest without immediately impacting the prevailing market price. Imagine a large institution wants to buy a substantial amount of Bitcoin. If they were to place a massive market order on the continuous order book, it could absorb all the available sell liquidity at various price levels, driving the price up significantly against them. This is known as slippage. By using the auction, they can contribute to the aggregate demand, knowing that their order will be filled at a single, fair price determined by the collective interest of all participants. How is this price determined? It's a fascinating process. Gemini's system looks at all the buy orders and all the sell orders submitted for the auction. It then identifies the price point where the total quantity of buy orders that are willing to pay that price or higher most closely matches the total quantity of sell orders that are willing to sell at that price or lower. In essence, it's the price that maximizes the matched volume. To help participants, Gemini broadcasts indicative auction prices leading up to the auction time. These are essentially simulated auction prices based on the order book at that moment. They update frequently, giving traders a sense of where the final auction price might land. This transparency allows liquidity providers to adjust their orders and ensure their participation. The benefits of the Gemini auction are multifold. First, it offers greater price discovery. By concentrating all this buying and selling interest at a single moment, the auction provides a highly efficient and accurate snapshot of the market's consensus price. This single, official closing price is incredibly valuable for various purposes, including mark-to-market accounting for institutions, calculating daily returns, and as a benchmark for other financial products. Second, it provides deeper liquidity. Because the auction aggregates all eligible orders, it creates a pool of liquidity that might not be available at any single moment during continuous trading. This allows for the execution of much larger trades with significantly less price impact or slippage compared to trying to fill a massive order on the continuous market. For big players, this is a game changer. Third, it ensures instant settlement and eliminates counterparty risk. Like all Gemini trades, auction trades settle immediately from pre-funded accounts. This means there's no risk of a counterparty backing out, which can sometimes be an issue with over-the-counter (OTC) trades. With that said, thanks for watching, and until next time.